So another interesting thing here is the S&P corporate earnings. In 2010, they grew by 44.9%. 2011, 15.2%. Now, they grew by 15.2% in 2011, and the stock market was essentially flat in 2011. The S&P pretty much ended the year where it started. 2012, you can see the estimate, and then for 2013, the estimated growth of corporate earnings. So that's not a bad thing, but they're slowing, part of the issue as far as keeping stock prices up. So inflation in the United States, so this goes back to 1800. The Federal Reserve was founded in 1913, and we can see here these blue lines, the up lines here, that's inflation. So we had high inflation. This is back in the 70s, 80s. Once the Federal Reserve came about, before that, we had years, spikes of deflation. That were these lines that go down. The only time we really had it after that was during the Depression, a little bit up here in 2008. But, you know, that was the Depression there. So before that, we had ups and downs. Now it's been mostly, you know, inflation. And what that does, too, is it kind of lowers the purchasing power of our money. Okay, we all know what that does, right, over time. Okay, so home sales. Actually, there have been some good numbers recently on home sales. Well, actually, permits for new houses. So there's still a big gap, as you can see here, between new homes and existing home sales, because new home sales mean they're hiring people for construction jobs. Existing home sales, you're not. You know, we actually have quite a phenomena here where a lot of people actually want to move. They are working. They want to sell their house and move, but they can't because they owe so much on it because the price has gone down. So they can't move up. You know, they can't move up, and they can't buy homes of people that want to sell and retire into, you know, like an over 55 community or something. So there's some real issues there about getting things moving. But the numbers are starting to improve a little bit there. And small business optimism has been coming up. We can see during the financial crisis there, that fat light blue line, that shows how low it got, and it has been improving. It's back up to where it was in December 2007. So that's a good thing, more optimistic. And the unemployment rate, it ticked up slightly last month. It's at 8.3%. So we can see, you know, where that has gone, heading in the right direction. All right, this is the fiscal cliff. It's a very dramatic name. As you can see here, the problem is Congress is not making these decisions that it needs to make for some of these things. So there are some things that are set to expire at the end of this year. So unemployment benefits, some of them are going to be expiring. So some people think they're going to have them for a certain period of time. They're going to end. There's spending cuts of $98 billion would begin in January, and it's spread equally, like among all the various places that government spends money. And that includes military as well and domestic programs. And then the payroll tax cut, any of us that are employees have been getting a break in our Social Security tax. That's set to go away. There really hasn't been much talk about extending that by Congress at all. And then the Bush tax cuts are supposed to end at the end of this year. So that would raise tax rates. So we can see here what these make up. The unemployment benefits make up 0.3% of our gross domestic product, then 0.6% for the spending cuts, 0.8% for the payroll tax cut, and 1.8%. So that adds up to over 2%, which would mean it could put us into a recession. A recession is negative growth. So we subtract all that from the 2%, and we're in a negative territory there. So hopefully our politicians will be able to get their act together and take care of some of these things. I was reading some information today about what it means if these are let to expire. We would actually cut our deficits significantly, which is a good thing too, you know, but that's the problem. It's, you know, you're giving and you're taking, you know, what do you take away from to give to what? But it would help. And if we let them continue to run, our deficits are just going to really just get higher and higher and higher. Here's our budget mix right now. So spending is $3.6 trillion. Our revenue, what we bring in the government, $2.4 trillion, and borrowing is $1.1 trillion. So 32%. So imagine that. For your budget at home, if you were borrowing 32% of the money you needed to live every year, that couldn't go on for too long. And the other important thing here is that things that make up, like the defense, Social Security, Medicare, and the interest on the debt is 6%. That makes up 70% of the budget. So it's pretty much, they're pretty well set, you know, not much they can do with that. And that net interest is at 6% of the budget is going to continue to increase if we keep borrowing more and more money. Anybody relate to that? A budget tells us what we can't afford, but it doesn't keep us from buying it.